Today, I want to get into why being a landlord in Canada is tougher than ever. This applies to multiple markets in Canada, but in my experience, BC seems to have some of the hardest policies to navigate. Recent years have brought a unique set of challenges, policies, and government bureaucracy that are making it increasingly difficult for individual landlords to maintain profitability and cash flow. If you're a real estate investor or thinking about becoming one, you've probably noticed things are expensive and complicated lately. The landscape is shifting, and what used to be a relatively straightforward investment is now filled with uncertainties and ridiculous government policy. First off, let's talk about house prices. This is one of the most immediate and visible challenges facing both tenants and landlords today. It used to be that you could find a property and cash flow it with a modest down payment and expect a steady income. There was predictable cash flow, which made financial planning much easier. But now, prices are at an all-time high and not coming down. The volatility in the market means that what you charge for rent can potentially be less than your overhead, which includes mortgages, taxes, etc. This unpredictability makes it really hard to plan your finances. You need to have a solid financial cushion to weather potential vacancies and repairs. Next, let's talk about competition. The market's flooded with big players, huge property management companies and real estate investment trusts. These entities have deep pockets and can afford to take risks that individual investors simply can't. There are more rental condo projects popping up than ever before, and these large companies have the resources to outbid you on properties and land. They can also afford to ride out tough times better than an individual investor. This makes it increasingly difficult for smaller investors to compete. This intense competition can squeeze you out of the best deals. When you're constantly outbid, it's hard to grow your portfolio and achieve the scale needed to be profitable. And then there are rising property taxes and insurance costs. These are expenses that you can't avoid, and they seem to be increasing year after year. These expenses can significantly cut into your profits. The rate at which taxes and insurance alone are increasing is often higher than what you can raise rent prices at, especially in a province like BC where rental increases are capped year after year. Over the past few years, property taxes have been going up, and insurance premiums have followed suit. This trend shows no signs of slowing down, making it a constant concern for landlords. If you're just starting out, it's tougher than ever to find properties at a price that makes sense. High home prices mean higher initial investments and often higher mortgage payments. Even if you manage to buy a property, the high purchase price means higher mortgage payments, which again eats into your cash flow. This can make it difficult to achieve the profitability you're aiming for. So, what's the takeaway here? The landscape for landlords and individual real estate investors has become a tough one to navigate. The challenges are numerous, growing, and significant. You need deeper pockets, you have to be more strategic, more prepared, and more adaptable than ever. This means staying informed about market trends, being ready to pivot your strategy, and having a solid financial cushion in place. Personally, I feel all of these factors combined, along with the current government putting in rent caps, banning short-term rentals and slapping empty home tax, speculation tax, and talks of a federal property tax is too much to handle for an individual investor. I see better returns, less headache and less stress in the stock market, income funds, dividends, covered calls, etc. Consistent, reliable cash flow without the overhead. What are your thoughts? Do me a favor, like and subscribe for weekly videos. Stay informed, stay prepared, and stay invested.